Sorry guys, just heard that there was no sound, so a little bit of disclaimer first before we begin to our Heiken Ashi presentation. My name is Nenad, and today I will show you two ways to trade Heiken Ashi version 2. Zigzag trend trades and breakout trades by zigzag. So first, risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk disclosure, you are proceeding with me. Online educational materials are developed by Admiral Markets ex Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions in any other detail, please visit www.admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only, and this webinar is for informational and educational purposes only. So with having said that, we are ready, of course, to proceed. So Heiken Ashi introduction, Heiken Ashi benefits, a Heiken Ashi V2 strategy. Today we are talking about it because I see that there are newcomers. So we need to explain a little bit of Heiken Ashi introduction benefits and, of course, Heiken Ashi strategy. So let's see what Heiken Ashi generally is about. So Heiken Ashi is very similar to Japanese candlesticks, but uses a different formula. In Japanese, Heiken means average and the Ashi means pace. So those are usually the average candlesticks which go basically by slow pace. Usually Heiken Ashi candlesticks show you the momentum and also mark the beginning of a breakout trade or a beginning of a new trend. So these candlesticks can be used to identify trending periods, potential reversal points, and classic technical analysis patterns. Usually the technique for using Heiken Ashi is pretty much different than using traditional candlesticks. So Heiken Ashi modifies the traditional Japanese candlesticks by sending the open and close through a calculation of the average. So they are a little bit different from our Japanese candlesticks. But the thing is, usually traders trade Heiken Ashi by using additional indicators. So if you want to trade Heiken Ashi, that will be a classical indicator-based strategy, because Heiken Ashi is not to be traded naked, and actually when using Heiken Ashi smoothed, then you always need to use additional confirmation and filters. So Heiken Ashi strategy is actually within the dimension of indicator-based strategies. So the benefits from using Heiken Ashi are, of course, you can see the direction, because it's very easy to identify the direction by looking at Heiken Ashi candlesticks. Sometimes it's easier, and it's pretty much easier in every sense to read through Heiken Ashi than through standard price action indicators. So Heiken Ashi uses formula which is very easy to identify, which can be very easy to identify potential reversal patterns. Then we have strength. We can see the strength of impending movement. We can see the strength of a time frame which we are trade, and we can see the potential momentum gauge for entry. So usually by applying a candlestick within one single time frame, we can differentiate between the strength and weakness at the same time. Also, there are wicks to consider, because Heiken Ashi uses wicks. So those wicks are very good for determining important support resistance levels when trading breakouts with Heiken Ashi candlesticks. Also, candlesticks are color coded. So for novice traders, it's much easier to see whether the trend is to the upside or to the downside, because Heiken Ashi candlesticks are actually color candles using green and red, usually using green and red colors. Also, one of the benefits from using Heiken Ashi is they can be coded through various expert advisors. So again, I need to remind you, I need to say that Heiken Ashi is basically it is within the dimension of using indicators. So it's not for pure price action, it's just for indicator-based strategies. So for all of you who like indicator-based strategies and who want to scalp and trade using Heiken Ashi, there will be a strategy which will be explained later during the webinar. So this is how standard Heiken Ashi candlesticks look like. We have a set of green or blue color-coded candles and usually red color-coded candles. Blue color-coded candles are bullish candlesticks, red color-coded candles are bearish candlesticks. So red and blue or green. It depends which version of Heiken Ashi candlesticks we actually use. Now, recently traders also started to use Heiken Ashi smoothed candlesticks, which smooth a lot of noise in the market. By observing this chart, you can see that it's prone to noise. So you can see these are wicks, wicks everywhere. Heiken Ashi smoothed does not show as wicks. Basically, they are smoothed pretty much to look the same, so showing us the real strength, momentum gauge and trend of the market. Some studies in 2014 show that Heiken Ashi is better used as smoothed Heiken Ashi. And it's usually paired with a couple of MA indicators. It is 4, but if we don't use MA indicators, I already showed you the strategy using MA indicators, we need to add additional filters. Those filters should be, of course, in the form of a histogram, in the form of support resistance level, and of course, in the form of one leading indicator, which can often be CCI indicator. So, good thing is to know that Heiken Ashi candlesticks are usually paired with a couple of moving average indicators. Usually it's 4, but if we don't use those 4 indicators, then we obviously need to use additional filters. As I said, those can be different. Histograms, leading indicators, and all other sort of things which can filter out bad trades. Of course, as always with Heiken Ashi candlesticks, we should not overuse indicators. So actually we need to have a couple of indicators. Heiken Ashi candlesticks, then of course support and resistance level indicator, one leading and one lagging indicator. We should not cluster our charts with too much of indicators. This is how it looks on Heiken Ashi smoothed, and basically this is the same price action using standard Heiken Ashi candlesticks and Heiken Ashi smoothed. So you can see that there is a lot of noise which was negated by Heiken Ashi smoothed. Now, if you take a look at this chart, you can see that basically it's the same time frame and the same price action movement, but look how Heiken Ashi smoothed goes perfectly fine with momentum, with trend and direction, while standard Heiken Ashi candlesticks are just too bit of noisy. Same time frame, same price action, but completely different movement. Now, tell me if something is not clear, but usually using these charts it's pretty much clear. So usually when we take Heiken Ashi breakouts, we need to mark most obvious swing points. So most obvious swing points for this swing were obviously this week and this week. Now at this example, we can see how Heiken Ashi broke through previous resistance, making a nice breakout trade. The same price action could be observed here, but we don't have wicks. It's much easier to see price action on Heiken Ashi smoothed indicator. Just observe the same price action here. We mark the low, we mark the high. At this point, there was a breakout. So actually, by using Heiken Ashi smoothed candlesticks, we managed to make the same breakout trade, but with much lesser noise than it was used on standard Heiken Ashi candlesticks. So Heiken Ashi standard candlesticks are to the left and Heiken Ashi smoothed are to the right. Now, as I already told you, these are the benefits from using Heiken Ashi smoothed indicator. And now we can move to actual strategy using Heiken Ashi version 2, version 2 system. So these are the rules for actual system, and this is how the actual system should be traded. So we can see that we can actually trade 3 different pairs with Heiken Ashi version 2. Now someone would ask probably why we only trade 3 different pairs. The thing is, when you trade indicator based strategy or indicator based system, usually those kind of system goes perfectly fine with major pairs. So we actually can also try to trade dollar Swissy as opposed to euro dollar and dollar yen. So when you see that a strategy or system give you only 3 additional pairs, you obviously know that you can trade also dollar Swissy and dollar yen. That is because dollar yen is also subject to major pairs and dollar Swissy is complete contra to euro dollar. So if you trade euro dollar, you can easily trade dollar Swissy. Dollar yen is also tradable within the context of those 3 currency pairs. So with Heiken Ashi version 2, you can actually trade euro dollar, Audi, cable, dollar Swissy and dollar yen. Okay? Time frame for trading is 5 minutes. So we actually want to take trades on 5-minute time frame. That marks this Heiken Ashi version 2 strategy basically as a scalping system. Now, where can all those indicators be found? They are not standard. So guys, if you want to receive this strategy, as always, you can just email me. My email is tarantulafx@gmail.com. So this is my email. So just as we finish with this webinar, you can send me an email asking for these indicators, and I will of course be glad to share that with you. So you need to know actually whether you want to trade indicators or price action. So if you're still within that dimension of indicator based systems and strategies, of course this is one of the strategies you can try to actually trade. It's not hard. You will see it's pretty much easy to trade, but still, as with all indicator based strategies, you need to know the context of those indicators. So that is why I'm always repeating those basic rules for trading. So again, euro dollar Audi cable are most obvious pair with Heiken Ashi trading, but if you trade euro dollar, you can easily trade dollar Swissy, and if you trade euro dollar Audi and cable, you can also trade dollar yen. That is the context of correlations in the market. So indicators which we use here are 2 MA crossover on default settings. So it's 2 moving average crossover. As we said in the previous slides and in the previous webinar, you can see that all of those Heiken Ashi indicators are usually coupled with moving averages. So actually, if you trade Heiken Ashi charts, usually 90% of the time you will see some moving averages. In this system, we don't use standard moving averages, but we use one of the filters called MA crossover. So MA crossover is the first step in determining entry point. So 2 moving average crossover as the first step in determining the entry point. As I said, the benefits of Heiken Ashi smoothed versus Heiken Ashi standard are so obvious. We obviously want to use Heiken Ashi smoothed indicator in this system. As you know, as you could see, the advantage is totally to Heiken Ashi smoothed versus Heiken Ashi standard, so we will use Heiken Ashi smoothed here. We also need to use RSI OMA or RSI OMA. It is the shortcut to RSI, you know, the standard RSI indicator, relative strength index, of moving average. Because we are using 2MA crossover as the, yeah, it will be chart, Claudio, don't worry. I just need to explain, the indicators which we use, and there will be the chart, of course. So this is RSI of the moving average. No problem, of course, because we are using two most obvious 2MA crossovers. We also need to see the strength of those crossovers. So RSI of the moving average will be shown to the lower part of the screen. But we need to add two levels. Of course, you will get the template for this strategy, and in the zip file which I will include to sending you, I included also the template. So we have RSI OMA with default settings but with levels 35 and 65 plotted on the lower part of the chart. Double CCI Woody is also the indicator on default settings. It's CCI Woody indicator and SPAD fib. Now, the thing is, this is used for early signal of possible entry. So this is only used for earliest signal of the possible entry. Heiken Ashi is used to capture the trend. RSI OMA is used to filter out the trend, and double CCI Woody is actually a signal. So with these indicators coupled and confluence of all these indicators, we trade towards Fibonacci SPAD fib indicator, which will plot support and resistance levels on the chart. The strategy looks like this. I will also include these rule sets in zip folder so you can actually practice it. So the long entries, you need first to wait for 2MA crossover indicator. It should generate a buy signal. You will see a blue color upside arrow mark. Also, you need to make sure that double CCI Woody is in green color. RSI OMA should be above 65, and Heiken Ashi smoothed is in green color. SPAD fib is not entry, mind you, it's used in exit. So we take profit on SPAD fib Fibonacci levels. Stop loss is 10 pips, but not less than 10 pips. Or the most obvious swing high or low on 5-minute time frame. Take profit is SPAD fib indicator is used for exit strategy. SPAD fib indicator produces Fibonacci levels, and you can use these Fibonacci levels to exit your trades. Or you can use trail stop after 6 to 10 pips constantly for exiting the trade. Sometimes, guys, you know, the things you saw how price action, I just need to make a little digression on today's trading. You saw how price action killed euro dollar today. Price, I made analysis showing you that price will be rejected of 2790 region. So it doesn't matter if you traded euro dollar or other pair which was correlated to euro dollar. Actually, if you trade euro dollar short, then you can trade pairs long which are not correlated directly to euro dollar shorts. We call that contra correlations. It was the same. Euro dollar was actually pretty much killed. I traded other pair. I traded dollar CAD, but it was the same. Initial spike was so big on euro dollar, it made 100 pip above 27.90, then it dropped to 27.50. The same was for, doesn't matter, dollar CAD. It went 30 pips in a drawdown, then it went 30 pips in profit. So guys, I told you that if you experience days like this, there is no strategy that will help you guys. So this strategy, or whatever strategy you use, you just cannot count on strategy to save you. You just need to use stop loss. You need to use low risk. Yes. Now the questions. How do you explain this amazing spike? On next webinar, which will be on Monday, that will be session recap, I will dedicate 10 minutes to explain this spike. So guys, please sign up for Monday session recap. This webinar is for just presentation of this strategy. So please wait for Monday. I will explain everything. I know what happened. And I will explain the spike on Monday session recap. So sign up for that. As always, session recap. Nenad is saying I sold there too, but I did take profit because AM servers went offline. Yes, server, obviously, MA servers went into problems. There were some DDoS attacks on servers today, and they were pretty much offline during the movement. Those 30 minutes, the price action was behaving very, very erratically on each of those pairs, and servers were restarted. The information which I got is the servers were attacked by DDoS. So actually, now you see the power of stop loss. Now you know how you can basically protect yourselves from so big movements, huge movements. And no matter whether if you use Heiken Ashi or other strategy, whatever, price action, Caramarilla MACD, doesn't matter. You would have been stopped out because price went 100 pips to the upside, then 100 pips, 150 pips to the downside. And I will dedicate 10 minutes of my time on Monday to explain what actually happened on Monday, and to give you, of course, new potential entries. So we need to always lower the risk when we trade. And this is good example what happened today. This is good example why I always say, guys, trade with low risk. It doesn't matter if you were successful in last 7-8 months. Usually there is only one single trade which can take all the profits if you use huge risks and huge leverage while trading. And this day killed many of the accounts. I know that there were traders which lost completely accounts because they didn't use stop losses and they were basically trading without proper leverage and without a proper stop loss. Sorry. So one day can kill all the account and give your margin call. Just imagine 150 to 200 pips on a full lot size without using stop loss on $5,000 account. More than 60% of the account wipe. So that is why I always use low risk for trading. Darshan Parelli, Darshan. Hi Nenad, are you saying people had preemptive shorts in the target profit zone of the initial longs? The thing is, I will explain that on Monday, but let's say today a quick resume what happened. Dollar was obviously weakening because of last few FOMC statements and today bad results. Also, what happened is there were huge orders above 27.00. Now what basically happened is the price spiked to that orders, killing all stops which were accumulated above 27 to 27.50, and also many of those unfortunate shorts covered. Basically, they were exiting from short positions, and that were another impulse for buying. And yes, one of the reasons are that people basically had preemptive shorts, because we also saw double divergence, and this was caused by a clear downtrend on euro dollar, and 80% of traders were shorting those rallies. And then what happened is price spiked up, killing all those preemptive shorts, stop losses, and covering. All those traders which were short went out of the trades by market orders or by stop losses. And that is what happened today. But I will use a deeper explanation, of course, on Monday, so stay tuned. But one single day is enough to give you 6 months of winners turning into complete losses if you don't know how to use leverage and how to use proper lot size. That is why I always say you can have a streak of good wins, of winners during 6 months, but if you use double the leverage and go 200 pip without a stop loss, goodbye. Yes, only that would kill an account. Exactly. It was also a stop hunt. Yes, it's called a stop hunt. But a sensible stop loss would have kept the losses contained. Yes, I risked Darshan, I risked 30 pips, and I lost 30 pips. But that was 0.56 loss. It isn't much of a loss. It can be recovered. But insensible risk is risk 10, 20%. Guys. Yes, open longs, long positions. I told you to go long on 26.10, 26.20. But unfortunately, well, you know, sometimes price just doesn't hit that pending order. I also had short today on 29.70, and it was missed by 0.9 pips. 0.9 pips. Okay? 0.9 pips, and I could have made some 30, 40, but pending order was missed. So we will see what will happen, but the thing is, I will explain that all on Monday session recap. So let's concentrate now on Heiken Ashi. So yeah, I know this is pretty much interesting subject to talk about. I will show you a complete recap of today's movement, in addition to, of course, new signals and analysis. But let's get back to our primary subject today. So Heiken Ashi. Heiken Ashi, again, need to rely on other indicator for entries and exits. These are obvious rules for trading this Heiken Ashi version 2 system. And now, let's see how it behaves on charts. Additional rules. If Heiken Ashi arrow appears, because I told you this is the signal for the earliest entry we can have with this system. So if Heiken Ashi arrow appears, we can wait for some additional candles for other rules to be met if it's in agreement with breakout or zigzag. I will explain that on charts. Use common sense. If it may zigzag, you can enter even on gray CCI bar. CCI bar, obviously for long entries, needs to be green. Okay? For short entries, it needs to be red. But if your common sense tell you that the price is really good for buying, because this is scalping system, you can neglect the rule for green CCI, you can enter on gray CCI bar. Because gray CCI bar is neutral. Breakout setup. Mark the most obvious swing, then wait for the rules. Usually the arrow will show first. Zigzag setup. Wait for the pullback. Usually the arrow will show first. So this is the first example of GBP 5-minute trade setup. Now, we need to see these candles are Heiken Ashi smoothed. They are telling us that the imminent trend on 5-minute is to the short side, right? Is to the short side. Green is obviously to the long side. Okay? Now, this candle, this is pink candle, and this pink candle marks 2MA crossover. It's obviously that this pink candle is 2MA crossover to the short side. So this is the earliest entry. This is Heiken Ashi, and candlestick is red, obviously bearish candlestick. Relative strength index of moving average in this example was at just below 50, and CCI was red. Sorry, now it's saying us let's wait a little bit more, then enter when all of those rules are met. Now, because you've obviously slowed this entry, if you don't want to make breakout trades, you can tell yourself, okay, I will wait for all the rules to be met. Obviously, there was a bit of range. We see blue candlestick, then we see here is green Heiken Ashi, and we see that all of those charts are just not in agreement. This is also 2MA crossover to the short side. But look at this. If you make a parallel here, let's say making a trend line here, you can see that, and you can count the candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15, it doesn't matter, 20 candles. There is obviously 1 hour of range. And this is 1 hour breakout setup. So this candle, which we call momentum candle, you remember when I was talking about momentum candles, now these are on 5-minute time frames, broke to this resistance, support. We had the earliest signal that we can soon enter the market, and at this point, this is 35, RSI OMA was at the level. CCI was to the downside, breakout happened, and look. Very, very obvious that this was short setup. Now let's see a long setup. So this was obviously a zigzag, and this was the first swing captured. Now you can also you can see this example. We see a gray bar here, and we can enter long here. But this is the example which I was meant to show you, because the price managed to pull back to Heiken Ashi smoothed indicator. Now when we are trading trend setups, we want price to pull back to Heiken Ashi smoothed. And we can see that Heiken Ashi smoothed indicator acts as trend direction indicator and pullback zone. So these are the rules for long entries on zigzag, and you can see how zigzag worked perfectly fine with the setup. Look at this. The price managed to pull back to Heiken Ashi smoothed, and on this candle the rules have been met. Neutral gray color of CCI, RSI OMA was above 65 level. This was a zigzag, a pullback to actual zone for entry, and look at this. Nice zigzags. Nice zigzags. Now, this is how you can go also with breakout. This was the previous example of a breakout setup. DMAs aren't visible. Yeah, the MAs are not visible, only arrows. Arrows are used instead of MAs in this strategy. So this is breakout setup, and this is zigzag and breakout setup. So this is breakout which happened according to the rules of the system. Yes, arrow is the crossover of MAs. And look at this. The price pulled back to Heiken Ashi. Heiken Ashi stayed red. There was a pink arrow. It was at 35 level. And there was a gray bar here. Gray bar here. This was obviously a green bar, so we didn't take the trade. So look how those filters work in agreement with Heiken Ashi indicators. Now we can also switch to real-time charts actually to see how those charts can look like when we actually take some trades out of it. So clear example is now it's scalping mode, so you can see this entry could have worked straight to next. Look at this, straight to the next spot fib support resistance indicator. Let's move. Okay, you can flip the charts of course and see if it works for you. The earliest entry signal possible, and on this candle the rules, basically in this candle rules have been met. So you can see that actual entry could have happened also here. But my favorite, I was testing this strategy, my favorite rule is that the price needs to pull back to Heiken Ashi indicator. Look at this. Price is pulled back here, and on this candle there was actually a signal to go short. So I always, wherever I trade, I like to see those pullbacks. And look at this, pullback, and then here. Let's see, for example, dollar Swissy. We can take dollar Swissy because it's the same as trading euro dollar in opposite direction. Yeah, this was obviously a signal here. But yeah, this was a breakout setup. Breakout setup happened here. So if we mark most obvious, and I will mark this line with red color. Okay, red. Yeah. Yeah, Darshan is saying, yeah, I noticed for the scalper TS with lower TP expected, you keep volatility light. Yeah, you keep volatility light, exactly. And this is breakout setup. Earliest signal, so be prepared for a potential breakout. And exactly at this candle, we can see that this candle made a breakout, but this candle actually was a retest. So this could have been a trigger happy breakout trade here. Look. And a pullback here. Pullback here. Let's see another. Yeah, this is zigzag. This was obviously a zigzag here. Yeah. RSI at 65 are neutral, and actual entry was here. 65, above 65, green, pullback, perfect entry. And this arrow is only a signal, be ready for a potential entry. So you can either take a breakout trade or zigzag trade. And when you see the arrow, it actually gives you the cue for next possible entry, either a trend or breakout trade. And again, most obvious, this was breakout and zigzag trade again. So wait, look for buy entries, we marked most obvious level for breakout on 5-minute time frame, and look at this. Price went straight up. Of course, when we see Heiken Ashi, which is the core of the system, if Heiken Ashi is green, we actually negate those pink arrows, right? So be ready for a long entry, wait for a pullback, and actually at this price here, yeah, this was the great entry. So it's above zero line, it's gray, it's above 65, and green arrow, blue arrow, sorry, but the Heiken Ashi was obviously green. Short entry possible. Now where is the breakout? Obviously here, breakout. Yeah, this was the breakout. And all the rules have been met. Now again, scalping possibility. Let's see, 65, green, and the price went up. So the question, which line of RSI OMA lines have to respect 35-65 rule? It is examples, and in this strategy, this is the most valid RSI OMA line. So thick blue line. Thick blue line should respect 35-65 rule. Look how many examples are there. But obviously, you need to use also common sense whether you will trade breakouts or possible zigzag trades. When there is a trend, there will obviously be more zigzag trends. Now let's put dollar yen also on the chart to see this. But it's very clear how this system works. Basically the same price action movement of all the pairs. Again, good entry here. And actual signal was here. Below zero line, gray bar, pink, red, 35. And look at this. And actually this was a good pullback trade here. 65, pull back to green, earliest signal for entry, and scalp. So guys, this is the core. This is pretty much easy. This is scalping system, and this is good for traders who like to trade price action, who like to trade indicator-based systems. And the only thing which I would advise is to test this on demo platform and use it. It uses again, and then you can ask me some questions because we are close to the end of the webinar. Arrows are 2MA crossovers, and they are used for earliest signal of possible trade. Heiken Ashi is used for pullbacks and for trend direction. RSI OMA is used as a filter for short and long entries, and CCI as leading indicator is used to signal an entry. When you combine those rules, which I've been explaining in this webinar, you can actually take two types of entries: breakout trades or zigzag trend trades, which are based on pullback to those Heiken Ashi candlesticks. So guys, if you don't have any questions, I can say that everything is clear. If you're interested, and I think that most of you are interested in this strategy, you just need to send me an email to tarantulafx@gmail.com. I will send you a complete indicator a complete set of indicators and template for this strategy, along as rule set for the strategy. I always advise you to demonstrate it. So we will see what will happen. Sorry for this. I have a little bit of cold. So sign up for new webinar on Monday, session recap, where I will present new setups and explain what actually happened today a little bit deeper. Yeah, guess a very interesting scalping system. I guess you have to prepare to send some mails. Yes, I already have some zips prepared. So guys, you can expect email to come just shortly after this webinar is over. Thank you for attending. Thank you for questions. Thank you for comments. I love when you ask me questions, especially Darshan. I like your questions because they're pretty much straightforward. And the thing is, I need other webinar to explain those things. And be sure that I will explain. I'm just too eager to explain what happened today. So yeah, you are too cool. Thank you. Hi T, I made some money on the setup you gave on Monday on demo. Thanks for the webinar. I'm glad you made money. Well guys, I'm always honest. Today I had a loss on 30 pips. But you know, I was sure I would have got into a winner trade today only if it wasn't up to me. My analysis was correct. 27.90, but you know, sometimes you just don't know what can happen. It was not up to me or up to anybody else to basically spike the price 200 pips. That was unexpected. But you got another lesson. I lost only 0.6. It's very easy to recover. But for others who lost 20 or 30%, guys, it will be hard to recover, believe me. Very hard to recover. So sign up for Monday's webinar, and I'm sure that these kind of things which happened today also affecting Admiral market servers won't happen again. I'm sure that complete Admiral markets support is working on the server problem which we basically encountered today. I also was writing to support telling that actually the platform was frozen for 15 minutes and they told me they got DDoS attacks, and DDoS is very, very nasty. So all they got to do is to restart the platform, and basically I hope that won't be happening again, and I'm sure they will fix the problems. But either way, we need to get ready for this week, we need to get ready for tomorrow's analysis, and of course to get ready for Monday recap, because volatility is back now, and I'm sure we will have many good setups during next week especially. So thank you for asking the questions. Keep the volatility light with this method, keep the stop loss safe, risk less, gain more, and you will be safe always. Your account will be safe. Thank you. I will talk to you very, very soon. Cheers. Bye for the moment.